Assalamu Alaikum everyone, welcome back to the channel. I hope you're having a good Ramadan. In today's video we're going to look at Pfizer. Okay, Pfizer is one of those companies that I have in my portfolio, and Pfizer is one of the largest pharmaceutical companies in the world. They discover, develop and manufacture healthcare products worldwide. Their global product portfolio includes medicine and vaccines. They currently trading at $38.66. There are $220 billion companies, so they are one of the biggest pharmaceutical companies out there. Their current PE ratio is slightly over 20%, so about 22%, which is not ideal, but I'll show you what the analysts think basically are saying about the company and how, whether it's cheap or not. Okay, they have dividend yield of 4%, so this means you get $1.56 for every single share that you basically hold in this company. Okay, so now we're going to look at what the company does, and we're going to look at also the financials for after that. So these are some of their products basically. So this is the latest annual basically report that they published around February time. They've got another one coming up very soon. I think is next month in May, so stay tuned for that one. Hopefully we'll go over that one as well and see if there's anything different, because they're actually making a lot of great forecast for the future, so we'll check that one out as well. But from last year basically the revenue grew about 8%, which is good, and these are some of the products, and as you can see they are all up from the year before, and that is something that is really good to see, as basically the company is growing and obviously they're increasing their product lines as well, which I'm going to show you in a second. One of the interesting things I found on this one was on this presentation was the 5-year clinical trial success rate improvement. So on basically around 2015, the company, so this is the different phases they go through when they basically coming up with a new vaccine and so on, right? So what happens is in 2015 they have 5% success rate, end-to-end success rate. The industry is about 8%. Okay, so the rest of the industry is about 8%. And this year, for whatever reason, maybe they've spent a lot of money on research and development, including maybe the new vaccine they came up with, is about 21%. So again, that's really good to see. The company is actually making progress in terms of their success rate, because remember, these companies develop those drugs, and the quicker they can produce and get approval, okay, the better for them and for us as investors. So these are some of the products they have in the pipeline. So these are products that are coming up. So they're like things like rare diseases, inflammation and immunology, vaccines, for example. They also have internal medicine and oncology as well. So all of these are basically some of the products that are basically coming up in the next couple of years. And remember, these companies spend a lot on research and development to come up with this sort of thing. So it costs a lot, but they obviously make their profit margins are very high. Right, so we're going to look at the financials now. So their revenue on basically last year was about $11.7 billion, and that was up about 11%. The adjusted cost of sales was about $2.9 billion. And then the research and development, they spent about $3 billion. Okay, again, that's considering what I've seen with the other companies like J&J, that's about in line in basically what they're doing in the industry. Again, one of the important slides in this is the guidelines. So this is guidelines going forward, so 2020 financial guidelines. So if you look at the revenue, currently is about $59.4 billion. So they say next year is going to grow about $2 billion, so $61.4 billion. Okay, the percentage of revenue, the cost will grow a little bit as well, and as well as that, the research and development will grow. So this is good to see. The fact, especially the top line there, is very good to see that they're actually expecting $2 billion basic revenue growth, which is, is absolutely great. Like, a lot of companies are actually struggling to make profit these days, and because of what's happened last year, and they are growing basically their top line, which is absolutely brilliant to see. So one of the things that basically they do, like we said at the early, they're doing is basically coming up with a new vaccine for the coronavirus, and this is basically it. So the BNT162b2 is actually the vaccine. Okay, and as you can see, the revenue they're expecting just from the vaccine itself is $15 billion. And now there is a talk that they actually recently they released a press, and they said they expect people to basically need, we might have to take third dose as well. So you can see they're going to milk this in the next couple of years. We'll be getting shots from left and right, because if you want to be healthy and you want to be safe, you'll probably be taking these things, and they will be coming up with all sorts of things. So so again, that's basically one of the things they've said already. People will need third doses, which means companies and countries will have to order. Okay, for example, companies in the United Kingdom, in the US, and so on, they have to order more of their products. So this, I can see this increasing or maybe even doubling in the next 4 or 5 years. So their revenue, again, they're thinking of basically excluding the vaccine. They expect it to grow from $44.4 billion to $46 billion. Okay, so this is excluding. What we saw earlier, basically, that was including the vaccine, but this is without the vaccine. That's basically what they're expecting. And their adjusted EPS is basically $2.50 to basically $2.60, which is good. So their EPS is also growing. And again, you can see there's a press release that basically they talked about recently, where they said they will be gaining about $15 billion in 2020 sales, only for 2021. Okay, so maybe going forward, this, like I said, this could be even more. All right, now let's have a look at the financials. So we're going to go to Yahoo Finance, and we're going to look at the income statement. So we're going to go to financials first, income statement, and we're just going to look at basically how the company is performing over the last 4 years. So for the revenue, you can see it's 52 billion, 53, 51 billion dollars. And then when you look at the cost of revenue, is about 11 consistently, and it kind of went down last year, which is very good to see. But also, we want to see the companies actually developing these drugs, and they are spending a lot of money on the research and development side of things. So I'm not sure why that has happened, but it's there anyway. And then when you look at their gross profit, you can see it's 41 billion, 42 billion, 41, and then $33 billion. Now, something has happened to the company last year. So they purchased basically acquired another company, and they had a spin-off and so on. So that could explain the fact that basically they spend their gross profit went down, but we'll see that maybe later when we look at the rest of the balance sheet. So when you scroll down and you go to the net income, you can see $21 billion to $11 billion. So maybe is it around this time they purchased that company. I'm not sure when they bought that company, but they always acquiring other companies. They're always obviously coming up with new drugs and all sorts of things. So when a new company comes up with a new drug they obviously because they're one of the biggest companies out there, the other companies will like to actually join them, so they actually merged with another company. So that could explain why the net income actually went down that year, but I haven't actually looked into this. So if you're interested in the company, maybe that's something to look at. So maybe around 2018 and 2020, maybe that's what happened. So you just need to look into that. And the final thing we're going to look at there is their balance sheet. Okay, so when you're looking at the balance sheet, you just want to see the assets. So the current asset, okay, so total current asset against total liabilities. Okay, so the current assets is, so if I can get this up there we go. Total current assets is $41 billion. Well, his current one is $35 billion, but as you can see, it's been consistent more or less in the last few years. And then when you look at total assets, they've got $154 billion against $90 billion. So what this means basically is, if the company goes down tonight, this is what they have to pay, and this is how much assets they have. So they've got more assets basically than thing. And the current liabilities, if you look at this, is almost at $26 billion against $35 billion of their current total current assets. So their liability is basically way less than their liabilities, which is great to see. For investors, that's all we're interested really, to make sure the company is profitable. They're not going to go down anytime soon. Then we go to cash flow and then have a look at their free cash flow. So $14 billion, 13 $10 billion, $11 billion. So they've got about $11 billion or $11.6 billion to pay us as investors as a dividend, maybe do a new spin-off or buy a new company or research and development. Okay, so they have a lot of money to pay us, definitely. Okay, next thing we're going to look at is we're going to go to Simply Wall Street. And as you can see, the company is currently undervalued by 53%. I've not seen anything like this before, to be honest with you. So they're expecting the company to grow 80, basically the fair value for this share price is about $82 from 38 currently. That's crazy. That's just literally, if you buy it now, you're doubling your money. But again, sometimes you have to be careful with these valuations as well, because it's just, in the end of the day, is a human. They could potentially make a mistake. And when you look at this as well, please always look at Yahoo Finance, okay? Because Yahoo Finance has got a lot more analysts and so on, people that they're connected with, the big companies and big research, stock researchers, whatever. So you might need to look at currently what they're saying is this. Basically, the stock should be about $40 per share, but it's currently $38. And when you look at this, okay, it's in between buy and hold. Okay, so again, so some people are probably saying it's a hold, some people are saying it's a buy, so that's why it's kind of in the middle. If it's buy or strong buy, then maybe you should go for it. Now, in my opinion, okay, you should be paying about 34 or below that, okay, nothing more than that. And you can do that because I think I've got about 15 shares of this company, okay, and my last purchase, I think it was about 34. So let me see when I bought I bought 5 shares recently. There we go, 5 shares of $34. Now, if you can get for $34, and it's absolutely possible because this was in February when the stock market was going down in February, that's what happened. Okay, so if you're interested and you really like the company and you've liked what you've seen today, then maybe just wait for maybe a couple of more weeks or just like a pullback, or just wait until they release their new earnings, and you might actually get an opportunity. Okay, and what I was talking about earlier is this company. So they had some company called Upjoint, and then they bought this company, Mylan, and then they created a publicly trading company called Freetrade, whatever it's called. Okay, so that's one of the things that they've done very recently. That's what I was referring to. Final thing I'm going to show you is simply Dividend Safety website. And currently they say in their Dividend Safety of Pfizer is 75%. The recommendation normally is about 61% or more. Okay, so even less, sorry. If it's 60, if it's anything basically above, basically I'm completely messing up this thing, haven't I? So this is the safety, it's not the payout ratio. Sorry about that. So the payout ratio for a company is basically what you're looking at is, if I can find their payout ratio, income. So the payout ratio is about 61% anyway. Okay, so what you're looking for, payout ratio of 61% and basically 75%. That means it's safe according to this website. Okay, according to these analysts. I hope you enjoyed the video. If you've lasted this long and you're interested what I'm doing here, please just like, subscribe. Okay, the more likes you give the videos, the more people will watch. InshaAllah, the more people we can help. Okay, like I've always said to you, all I'm doing is basically sharing my journey, and InshaAllah, if you could do the same, that would be brilliant. Can you leave a comment on the comment section just to say if you own a Pfizer, if you're buying it, or if you're thinking about it, if you own any other pharmaceutical companies as well that we might research and help with it. You know, maybe I might do a research in the next few videos and so on, so we can share it with the community. Let me know, InshaAllah. Have a wonderful day. Ramadan Kareem again. Assalamu Alaikum.